Well, hello once again, everybody. Welcome to the Comstock channel. I'm Harlan Bowling with you. Pleased to be talking with you about our ag commodity markets today. I have Joe Camp of Comstock on with us. And I want to remind you once again, be sure to like this video and be sure to click that bell icon so you can get notified of whenever we have a new report coming out and stay up to date. And if you like this program, feel free to share it with a friend, a neighbor, a relative, whoever can use this information. And I hope you feel like passing along this good information that we have to share. Look forward to talking with you more as we move forward. And Joe, I want to bring you into the conversation here. Let's analyze this market activity that we had here on a Wednesday. I was looking at the bar chart today, and it was interesting that we had the corn near the highs of the day. Soybeans, maybe not so much. And I see that you actually have a graphic about South American conditions. Did that play a role here?
Yeah, good afternoon. Good afternoon, mostly for these grains that you speak of, with corn and wheat higher, soybeans flat, but that's a win considering where we've been here in recent weeks. So there's some signs of the selling abating, not so much sustained upside momentum to speak of just yet, but some taste of bullishness relatively so. And part of that here this week is certainly linked to the South American weather picture. We've had so much focus on Brazil, and rightfully so, as their soybean harvest kicks off. We see that the drought there is going to impact crop production from the first soybeans to eventually the second safrinha crop of corn. But really the talk this week has shifted down into Argentina, and they've got a dry week ahead. We can see that on the rainfall map. This is the next 7 days down there in the south of the continent. You've got Argentina red, and not getting much in terms of showers ahead. And so that can be bullish like it has been for meal. Argentina is such a big player in the meal market. Really some response so far for these crop condition worries developing for Argentina. To put it into perspective, I mentioned Brazil starting their harvest. For Argentina, it's going to be further along, not until, say, late March that they really start the soybean and corn harvest in earnest. And so for them, it's like our, mid-August in the Midwest, and it's a crucial period for crop development, which is why, so far this week, the market's responding to the upside for this news about Argentina leaning dry.
It seems crazy that Brazilian harvest is already starting. But they have such a wide growing season there. I mean, a wide window, and they go forever the way it seems. I mean, this is going to be going on for how many months now?
Yeah, they do. We look at some of these early harvest numbers, the soybean crop maybe just pushing north of 10%. But you mentioned how big of a country it is. And so it'll be a month and a half before they're starting to get even the majority of their crop put away. You think about Brazil, similar to where you think about the U.S. Again, Argentina further in the south, so maybe you could put their growing region similar to like our North Dakotas or our upper Midwest states, whereas parts of Brazil are more akin, closer to the equator than would be, say, our Texas or Southern Plains states. And for that reason, it is going to be, just like we experience it, a harvest that starts in one region, but then rolls, in this case, the Southern Hemisphere, further south as the season progresses. So a lot to come still on monitoring progress down there.
Now, you were talking about the dryness concerns in Argentina, but it's not realistic to expect things to get as dry as they were a year ago, right?
No, and so the projections still have Argentine crops, basically roughly doubling what was produced last season. But we are at a point, the market reacting to the fact that, okay, these estimates at the same time are going to be up from a year ago, but now potentially lower from where we've just come to start expecting them here recently. And that fits too with Brazil, further downside to come on those estimates. We're going to need a further reckoning of some of these lower supplies being realized in the market before we start to see soybean exports pick up in a bigger way. That's been a problem just generally for the soy complex here, that if we look at bean export sales, we've kind of flatlined here as of late. And that's in part due to what we see in so far as the Brazilian prices being so sharply lower than what we can offer soybeans out of the Gulf, as shown here. The U.S. price up top in blue. You've got Brazil way down below, some 60 million or $60 per ton lower than where the U.S. is at. And so big buyers like China still in the market down in Brazil. But we could start to see that gap close as farmers harvest soybeans down there and realize that they've got less to put away and less ultimately to offer to the world market.
So do you think we have already reached or maybe even surpassed the peak of our export business for this year?
I think we are getting close seasonally, as you'd expect, to peaking out on soybean export sales, but that we will also still have one last sort of push here over the coming several weeks that will be in response to these lower prices. And that is quite simply something that we have to expect will reinvigorate demand. The fact that soybean prices futures are down some, $2 high to low over the last 2 months. And I would expect that to start to trigger more interest in this market before ultimately the export focus shifts from soybeans over to corn.
So do you think this is a point where producers should be taking a look at maybe rewarding where the market is right now, just because things could go south in a hurry if they do turn in a big crop down south?
We are at that point, generally speaking. We've got more soybeans to sell per our advice than corn. So we wonder if we can get a little bit more out of this final push, if you will, for that export demand, get a start towards a spring rally and use that to wrap up export sales into a market that for soybeans, a lot of areas of this country still offering firm basis. And I think just ahead, some better opportunities for those marketing efforts.
Do you think it's pretty critical to get a decent weekly export sales number tomorrow?
Yeah, it is, because we'd be following up on what was a better week last week. That was our first sort of full week, if you will, after the holiday period. And it was something that had us thinking, okay, these lower prices are triggering extra demand, and we are seeing a response in the market. Last week, too, being our first daily sales announcement for soybeans to China, the first of its kind in exactly a month. So we expected to potentially see some of those flash sales pop up this week. We haven't yet, but we still may in the days ahead. Ultimately put together, the weekly number should continue to rebound from here.
So what got into the wheat price today? It had a nice rebound.
I think you've got general bottoming for international prices that U.S. exporters compete so heavily with, namely those in Russia, who have led the market lower. That country still dumping cheap wheat into the market, not really inhibited by the war in Ukraine. But you have some semblance of the worst of it being over. The last big harvest in Russia, for the most part, put away and not pressuring prices as much as it was a couple of weeks ago. And so similarly, you have the other competitors like France following along. And so that helps the market here to expect that maybe too, wheat prices are down in such a way like corn and soybeans that we'll have some renewed export demand to come there as well.
Well, I see where the U.S. dollar value, the U.S. dollar index was quite a bit lower today. Was that a big factor?
Yeah, after a couple of days worth of an upswing, the dollar index leveling off. We always, of course, think about the dollar because as it is lowered against other currencies like those in the hands of our customers or our competitors, then it makes our grain exports cheaper to global buyers. And so that move today sort of supports that optimism over export potential going forward. And just generally speaking, a lower dollar is going to encourage more investment capital to flow into the commodity space. So that was a better environment when you paired it with higher oil and higher stock markets to support this move that we had today.
So does that include livestock, do you think? I mean, is that what partially supported it today, do you think?
I think so, because it's a measure of risk off in a way when the dollar is moving lower, especially along with this stock market higher. And so you have a return to the story that has been driving livestock prices, particularly cattle, where we're confident, relatively speaking, in the health of consumer demand. And so on a day like this, stock market up, that's going to be linked to what we observed in the higher cattle futures and also the strength lately for hogs.
Yeah, I was gonna ask you how far you thought the hogs could run yet.
We are seeing now the board stretch towards various points of technical resistance, top of the recent range, a couple of the major moving averages. Plus, you've seen the futures outrun the cash trade in a big way, and so we're kind of putting the brakes on, wondering if we might have a correction in store, thinking that we're close to values that might be of interest to producers for hedging. Ultimately, though, we don't want to turn too bearish. It's the time of the year when seasonally the cash market can start to move up, and that would help it catch up to the board. And also, you've got just generally the fundamental outlook calling for tighter production numbers heading into at least the summer months. So cautiously optimistic, going to maybe on the hogs certainly reward that strength.
Interesting stuff. Well, I wish we had more time, but Joe, I'll need to wrap it up for this particular segment. I'm sure we'll be talking a lot more moving forward. Joe, if our viewers and listeners out there would like to get in touch with you directly, follow up on this conversation, I'm sure they have a lot more questions about things. What's your phone number and your email in case someone wants to contact you directly and pick up where we left off?
Sure. My phone number is 712-227-1095. My email is joec@comstock.com. Comstock.com. That's where our listeners can have access to our Comstock report that I contribute to, plus all of that contact information up there.
And there's just a whole plethora of information available for the subscription audience out there as well. So I encourage them to check that out. Joe, great to visit with you again. Take care, and we'll talk again soon. Joe Camp with Comstock. That'll do it for this report. For producer Brianne Hendrickson, I'm Marlon Bowling. We'll see you next time on the Comstock channel.
You can find us on Facebook, YouTube, and TikTok.